let's get in Mr. Rajiv Kumar Bakshi, Executive Director of Bank of Baroda, to talk about all that and more. Mr. Bakshi, good to have you. Thanks so much for joining in. I'm guessing that despite the fact that liquidity is tight, another CRR cut is out of the window. What else do you think that the RBI could do in order to give some bit of an improvement to the current liquidity picture? Because after a 75 basis point CRR cut, one would anticipate that there wouldn't be any further tinkering with that rate at least.
I think liquidity, RBI has done quite a lot with 50 basis point cut in January followed by 75 basis point now. Although CRR is a monetary policy tool also, which should have ideally been used in conjunction with the repo rate or policy rate cuts. But RBI has, out of necessity, used it as a liquidity measure. So this has been principally used to infuse liquidity, which was continuing to be quite tight. Though, if you analyze the things in perspective, the liquidity was tight, but it may be very more tight for certain players. On a systemic level, the system was still able to borrow against the SLR holdings through the repo window. There was hardly any borrowing through the MSF window, but then there would be players who would be more tight, and then the advance tax payments were coming, and the year-end considerations when the bankers would normally do a number of things for the balance sheet considerations. The rate of interest were going up and continuously on deposits and all. So the RBI had to act preemptively. They could not have waited till 15 because the reporting fortnight was to start on 10th. If they had waited till 15, then the next reporting fortnight would start already 4th. So they've done enough. I don't think any CRR cut is anticipated anymore. I think the market should be able to take care of its operations.
In which case, what do you expect the RBI to do tomorrow? And working with an assumption maybe that the repo or the reverse repo may not be cut tomorrow ahead of the budget, wherein the RBI stated that they want the government to do some fiscal consolidation first. Do you believe that over the next month and a half, say by April end, we could see some bit of policy rate action too?
Yes, that is the anticipation on which we all have been banking our hopes for quite some time. Nobody, including the bankers, is very happy with high rates of interest, which have been necessitated by the high inflationary concerns. Till some time back, the signals were becoming clearer that a policy rate cut may definitely happen either in March or April. But since then, the things have muddied a little, with oil not relenting and therefore inflationary concerns not totally going away, particularly for a medium-term horizon. And therefore that restricts the RBI's capability to cut rates aggressively. Despite that, the inflation moderation which has happened and the 13 hikes which have taken place, I think they create a ground for some sort of a cut, because growth again is also a concern. Therefore, in April, we definitely hope that rates will be cut, although during the year there may be a moderation of the total cut that may be possible unless situations change, and which keep on changing. So tomorrow, I don't know, this may be more an expression of the RBI's analysis of the situation and what hopes they pin on the budget which is coming in the next day, and the fiscal consolidation, the happening of which can change RBI's actions to some extent. So what if that happens, or what if that does not happen, or what are the choices and how the global situation, Indian situation is emerging? I think it may be an analysis of that and giving RBI's mind as to what can happen going forward. I don't see any rate action, which is what we find as tangible events that may happen tomorrow.
What about your expectations from the macro indicators, really, in terms of what you expect, where you expect inflation to be as we progress through the year, and also credit growth targets?
The inflation is a number which has still been not comfortable. Our guess is that it may be around 7%. Going forward, it will of course depend on a lot on the oil conditions and the monsoon and various factors. Vis-a-vis credit growth, it's a clear thing. India is a bank credit dependent economy, and therefore there is a direct correlation between the GDP growth, the money supply growth, resulting into deposits and lending. If the policy announced by the government in the budget or otherwise creates an environment of growth and some policy uncertainty is cleared in certain sectors, certain actions have been, of course, taken outside the domain of the budget, which is tying up coal for the power plants or ensuring that environmental clearances and all become better. But if that is followed up by more action and it creates tangible action on the ground, creates certainty and optimism among the business, and then the economy is expected to grow, say, by more than 7 or 8% next year, then definitely the credit growth will be more robust. Otherwise, therefore it can be anywhere between 15 and 20%, depending on how the outlook for the economic growth is panned out.